Good day, ladies and gentlemen, and welcome to the show on this Tuesday, the 31st of May, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's the thing. I've heard an awful lot of talk out there about a reset. How they're going to do a reset of the financial system. To really get free of this Ponzi scheme that's been run, where actually your dollars are nothing more than credit or debt. The reverse side of credit is debt. To get free of this Ponzi scheme and get into real money again, to get into something that's tangible. See, 1971, Nixon took us off the gold standard and he really started us. We really embarked on this. Something that's never been done before. Worldwide. And it's a global Ponzi scheme with fiat currencies. It's going to continue to cause enormous problems within the system, and it cannot be reset until you devalue the currency. Completely devalue the currency. I would say at least 99% devalue the currency from where it is right now through a hidden tax called hyperinflation. It has to be done. They can't get out of this Ponzi scheme unless they do that. They're going to have to basically suck 99%, or basically make your dollar's purchasing power what your dollar purchase, the same as a penny is now. They got to get it down to that point. And there's no way out of this. You can't do a reset prematurely because all of the value stored in fiat currencies around the world. Everything is denominated in the fiat currencies around the world. And you have to depreciate that value. You have to get it down to a certain point where you can finally reset everything and get out of this enormous Ponzi scheme. And it's going to do that anyway. Regardless of what they do, no matter what maneuvers they do, quantitative tightening, raising interest rates, they're going to get to a point where they can't service the debt if they continue to raise rates. It's a trap. And they're trying to wiggle right now to try to get out of this trap. But there's no getting out of this trap until they basically, this hidden tax absorbs all the wealth in the system. I know it's a strange thing, but something's going to break before we get to that point. The wealth effect is going to disappear. And this hidden tax is going to rob the people. It's robbing the people. Basically, what it's doing is doing the opposite of Robin Hood. Robin Hood went out there and he stole from the rich and gave to the poor. This is doing exactly the opposite. This is stealing from the poor and giving to the rich. And it's going to continue this process until it gets to a point where it has to be reset. The reset or restructuring is going to have to come at a certain point. But you can't do it now without destroying the system, because all the value is stored. And you just can't transfer that value instantaneously over into something else, anything else, without destroying the system. The hyperinflation has to do a slow destruction of the system until we get to a point where they can get out of this trap. This is basically what I wanted to say. And we're moving in that direction. This is really what they want. They want to get out of this trap. And the only way is the inflation. Is the only way to get out of it. This whole thing that they're doing now is going to only make the problem worse. And what I mean by the whole thing that they're doing now is raising interest rates, doing quantitative tightening, which starts right away pretty much. The quantitative tightening, and it's going to have an effect upon the markets as well. I think that they're underestimating the effect. They've been concentrating too much on the raising interest rates. The quantitative tightening is really going to drain the liquidity out of the system. Big time. They're not going to get away with the quantitative tightening. the system. Well, we're already seeing what the markets are doing today. Let's get in there and take a look at the markets, by the way. Let's open up the charts right here. Take a look at what's going on. Silver price took a big whack this morning and went down below $22, down to about 21.45 or 21.50, something like that. It lost about a half a buck. Now it's bounced back, and it's 21.88 right now. Still, you know, silver and gold right now, I mean, when you consider how they've suppressed the price for so long and how the price and everything else has went up, for crying out loud, the fuel price, unbelievable. The price of a barrel of oil this morning's $119, for crying out loud. How are these miners supposed to make any sort of profit? With gas and diesel prices mining is so energy. They don't mine the way they used to mine. They used to mine with a pick and shovel. And they used to have a mule go down into the mine and haul the cars up out of the mine. You know, the little cars, like little railway cars full of ore. You know, that's the way they used to do it back in the 1800s and stuff. Nowadays, they use great big hydraulics and diesel engines and conveyor belts, and most of it requires diesel fuel. And you guys know the price of diesel fuel now is pretty much doubled. Well, you know, back then some of the more cost efficient mines, back when diesel fuel was half the price it is now, could get the ore out of the ground for like $9 an ounce. You know, and turn it into like what they call a dory bar. You know, for like $9 an ounce. Some of the more cost-effective mines. And that was a few years ago, back when diesel fuel was a lot cheaper. Now the cost is doubled. Well, you do 2 times 9 is 18, just for the fuel costs. You know, and what, they got the spot price at 21? Well, then there's shipping on top of that and everything else. I mean, you know, you're looking at no profit margin whatsoever if the price of diesel keeps going up. What's happening is 2 weeks ago I told you guys that they're getting down near the cost of production. When silver price dropped from 26 down to about where it is now, about $21, $22, right? I said, well, they're getting down near the cost of production. But that was a few weeks ago, just a few weeks ago. I was telling you guys that. And diesel prices were cheaper then. They've just shot up. Like maybe 20% or something, 30% higher. It's all about the cost of fuel. The cost of mining is all about, and this is moving so fast. The price of fuel is shooting up so fast. And the silver cost is not going up any and they've got no profit margin anymore. I would say right about now, the mines are just going to say, hey, you know, we've just crunched the numbers this morning with the new price of diesel fuel coming in, and the new price of gasoline coming in, and all these energy costs, and we ain't making no money. No business is going to work if they're not making money. They will close the mines or close sections of the mine that haul the silver out. But that won't translate into the market, not right now. If they do that, if they start to shut down production and stuff, that won't translate into the market. That'll translate into the market next year. There just won't be there'll be a gap there where their silver production drops. I mean, maybe it was 800 million ounces a year, you know, and then all of a sudden it's like 760 million ounces, and all of a sudden if this keeps on going the way it's going, this trend of the cost of silver not going up and the cost of all the fuel that the miners use going through the roof, you might see that silver might drop down to like 650 million or 600 million ounces is all it comes in when the numbers come in. Because the mines have said, hey, you know, this is not cost effective. Even though it's some of it, or a lot of it, a lot of silver is a byproduct of mining other metals like tin, zinc, copper, you know. But even still, the mines will say, hey, we're going to keep this for ourselves. I'm not going to sell into the market at these prices. Stuff like that can happen. I'm going to tell you what, they just cannot keep these prices down below mining production costs. And I've said this before, and I think they're getting awful close to mining production costs on the price of silver. Honest to gosh, guys. And what a time for somebody to come in, some billionaire to come in, or a consortium of billionaires to come in and start nibbling away at the physical supply. It might just become too tempting in the end. Even though they know about what happened to the Hunt brothers, it might become too tempting in the end. And they might come in anyway. It might be a consortium of them. Maybe 10 of them will all work together and each take a little bite of the pie. And then the next thing you know, there's none left for anybody. 1852, down $1.20. To tell you, what would they do? These guys out there that make things make solar panels. How are they going to do their new green infrastructure stuff if they got no silver to do it with? How are they even going to wage war every time they use one of these cruise missiles? For crying out loud, there's like 100 ounces of silver inside each one of them. Didn't know that. A lot of people didn't know that. 100 ounces of silver inside a cruise missile. What happens to all that silver? Boom! It's spread out over 50 acres. Little tiny fragments of it. Unrecoverable. And it's the same way, your cell phone. What happens to your old cell phone when they finally crunch it all up? Gone. It all goes into the landfill. And what about it? Silver as a resource in the Earth's crust, They keep hauling the best ore out of the ground, and now ore grades are falling. And that means the grade of the ore means how many ounces of silver can you get out of a ton of ore? That number is dropping like a stone because they've hauled all the good stuff out. It's a no-brainer what's going to happen in the future. It's just at what point do they have to relinquish control over these markets? Because they've been controlling them with the paper short contracts for so long. Anyway, down $1.20 on the live gold price here. Let's take a look at cryptocurrency today. What we're looking at is a Bitcoin price of 31,737. So it's come up quite a little bit. 737. Let's refresh the page. 31,402. So it is dropping right now, but slowly. But it was down like 29,000. I think it touched 28,000. It's down 31.4. So that's not bad. It's popped back up a little bit from where it was. Cryptos. But we're not having a good day in the market. It's down 424 right now. Let me refresh the page. Down 313. It's one of those days. I wouldn't be surprised if it comes back up and it even puts in a plus of a small little bit, or it could drop even further. It's very volatile right now. You know what a risk it is to invest in the market right now? I mean, we're not like we were back when everybody was buying the dip. Right now, this is a very dangerous until the Fed pivots. How do you know when the Fed's going to pivot, guys? Well, I got an indicator on here I'm going to show you that gives me a strong indication of when the Fed's going to pivot on all this and change direction. I got an indicator. I'm going to show you what it is. And it's why I point it out on my show every day. A lot of you guys miss it because you don't know what it is. And a lot of times I don't explain what it is. But we're going to be there in just a second once we take a look at oil here. Oil's $119. It's up $3.97. That's unbelievable. $3.97 up. $119 a barrel. Oh my gosh. This is an oil-based economy. Everything you buy has had oil touch it. I don't care if you buy a can of beans. Some truck has delivered that and it's taken oil to get it to the store. The packaging might have oil in it used in the production of the packaging. Even the can of beans itself, growing the beans, it all costs oil. Everything's got oil in it. And when the price of oil goes this high, it's devastating to the economy in a general sense. But the economy's been crushed anyway. You just can't go and close everything. Gyms, uh, restaurants, pizza bars, everything. Close everything up, and the only ones that are able to stay open are ones like Walmart and these big stores, big chain stores and stuff, who can pass all the laws that they constantly putting in. They can comply, and they know how to comply. They got legal teams. They're the only ones that can stay in business, and they're able to get right in there and get government grants and stuff like that, and uh, government sucky money from the government. Like putting ma and pa out of business. So they've long since went out of business when COVID hit, and you just can't devastate the economy like that and expect that you're not going to have sour results on the other end. And we're going to be paying for that ultimately. There's no free ride. We're gonna see, and we're already seeing it crush everybody who's in the middle. The people who are on relief from the government, and they're getting checks and stuff, and they're living off the government. They're on one end of the spectrum, and then you got these big fat cats on the other end of the spectrum who are just sucking all the money up, and they're living off of the government's pokey of giving them the money with low interest rate loans. They're able to get into that money pool, and they're getting richer and richer and richer. And then you get everybody in the middle. Most people are in the middle, and you are getting squished like a bug. It's like a hydraulic press is coming down on top of you. And this is part of it right here, this crude oil price. Now, remember I told you I was going to show you an indicator? This is it right here, the MOVE index. And you can see right now the MOVE index is dipping down. Down means the pressure's coming off of the credit markets. It means that the credit markets are stable right now. When it's down below 100, it means that the credit markets are getting more stable. When this thing goes too high, the MOVE index, that means instability in the credit markets. And that means the Fed has to do something. It means they have to change their monetary course. And this is something that the Fed watches like a hawk. Right now, they got the green light to go forward with tightening and everything else, because this thing's down from where it was. If we take a look at, let me see, let's try this one day here. And not giving me a chart. In 5 days. 5 days. You can see it's been coming down. Okay. Over the last 5 days, it's down 11 points at 98.48. So it's down right now. And that means that the Fed has a green light to go ahead and tighten. When this thing shoots up, and it can shoot up very quickly, that means the Fed has to stop what they're doing, and they have to go back and reverse monetary policy, because it means the credit markets are tightening up. Okay, let's take a look now at bonds and rates. Bond yields are climbing today, and they're climbing a lot. U.S. 10-year at 2.86, up 11 basis points. And U.S. 30-year is 3.07. It's up 9.5 basis points on the day so far. That's a big movement. Let's take a look at the dollar index today, 101.94 on the dollar index. We got a rising dollar index. Dollar is going to stay strong until the Fed reverses direction. I mean, what we're looking at here with mostly it's being compared against the euro. Unless they start raising rates to stay competitive with the Fed, we could see this dollar index slowly climb up even higher. It could make it up. Now, see, here's the thing. Your purchasing power is declining for the dollar. And a lot of people relate that to the dollar index. They say, well, strong dollar index, shouldn't my dollar buy more? No, the dollar can be hyperinflating and still have the U.S. dollar index go up. If the other currencies are doing the hyperinflation thing worse and faster than the dollar, because it's only being compared against this basket of other currencies. And, the dollar is the strongest one of the bunch. And so, it depends on how fast the euro's depreciating. Euro mostly, I think 60% of the DXY is euro. That's what's being compared to, 60%. And so a lot of it depends on what the euro does. And so if you've got a European Union that wants to start to do the same thing the Fed's doing, but even more so, that could bring down the dollar index. If the euro becomes if the really tight monetary policy over in the European Union with the euro, they could actually bring this dollar index down. But on the other side of that coin, if they got loosey goosey monetary policy over there in euro with the euro, then the dollar index will go up. So I mean, here we go. Anyway, let's take a look at. We we've done them all. We've checked all the markets. So anyway, listen, guys. What you got to expect is we're going to continue with this beat down in the markets until the Fed changes their monetary policy or they pause. And what's most likely to come is what they call a pause, where they give up with their quantitative tightening and they're raising interest rates. And I'm expecting that pause to come this fall, and that's when I'm expecting the markets to start to shoot back up again. Finding the bottom of all this is kind of tricky, but it can be done. And that's that. I'm going to be on here telling you when I think that we're at the bottom. We're not there yet, I don't think. I think we got more room to fall in the markets before we reach this bottom. And then she starts to turn back up again. And the markets, this time I think they're going to break and set all new highs. They're going to break above 36,000 on the Dow when it comes this time. I think we might make 40,000 on the Dow. And of course, when we find that bottom, I mean, where is the Dow right here? I mean, we might be in the 20s. When we finally find this bottom, we might be in the 20s someplace. Okay? And I'm telling you, it's going to go from the 20s to the 40s. It very well could. So we've seen this kind of action before. If you know how to play this wash, rinse, repeat, take a look out over a 5-year period here, and you see this right here, this big waterfall moment in the Dow, right? Well, this one we've just had is not as big yet, but it might be just as big when it gets down to its full potential. It might be like down to here, like 28.8 or something like that. Okay? And it might be just as big a move to the upside on the other side of this. That's why I'm calling it wash, rinse, repeat. You see this cycle here. Oh, look how good people made when they bought down at 19,000 on the Dow. And then it went all the way up to 36,000. Right? Well, I'm thinking we're going to see this same sort of move. This is going to maybe go down here in 28, 29,000. It might even go down to 26 if the Fed is really tight with the money. And then they're going to turn everything around. It's going to start to go back up again. And 40,000 is not impossible. Even 45, maybe even 50,000 Dow. Once this maneuver it's going to look just exactly like the same thing all over again. This same thing where it come down and then it went boom back up. It's going to come down and then it's going to go boom back way up higher and set new highs. That's what's going to happen. But it all takes time to play out, and you got to know when to buy in. And I think this move is only half to 2/3 done. I think we're going to see more coming. More downside coming. Anyway, listen, thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next show. Bye-bye.